Good morning or afternoon, and welcome to Nature's Returns, Investing in Ecosystem Services, a webinar series hosted by the Yale Center for Business and the Environment. My name is Corey Scult, and I will be your host for today's presentation. As many of you know, the Nature's Returns webinar series addresses the growing importance of ecosystem service valuation and investment. Each presentation is recorded and available from CBay through YouTube and on Yale's iTunes channel. The topic of today's webinar is water. Water is extremely scarce in the Western United States and is the lifeblood of the area for both people and nature. Western water law, however, was designed to promote consumption and does not incent conservation or other creative ways to meet current day needs. The law is slowly changing, but fundamental views on how to use water and who is owed what needs to change too. Mike Higuera, today's guest, is the Director of Resource Investments at Conscience Bay Company. Conscience Bay is a certified B-corp that invests in commercial real estate, agricultural land, and water assets with the mission to produce economic, social, and environmental returns. Mike will discuss the company's strategy for investing in farms and ranches and advancing creative ways to meet increasing demands for water while protecting productive agricultural lands. By working with the agricultural community, Conscience Bay hopes to move the needle on water use and conservation strategies while increasing the value of the properties it owns. Mike will talk about Conscience Bay's investment thesis, how the firm gains financial exposure to water through farm and ranch investments, and lessons learned from his work in the field. Mike joined Conscience Bay in 2015 to oversee investments in agricultural land and water assets. Prior to joining the company, Mike spent 7 years at the Nature Conservancy, focusing on land acquisition and conservation easement transactions in Colorado. He previously spent 7 years as a transactional real estate attorney. Mike is a graduate of Middlebury College and received his law degree from the University of Michigan. Now, today we're excited to continue using a new format for this webinar. We will have a shorter presentation than usual from Mike, about 20 minutes, which will allow ample time for an audience-fueled discussion. We really want to foster a good two-way dialogue between Mike and you, the audience. Please submit your questions and we can have an in-depth discussion with Mike about all the areas of water investment you're most interested in. You can type your questions in the Q&A section of your screen throughout the presentation, and we will collect them and present them to Mike at the end of his presentation. All right, let's get started. Mike?
Thanks, Corey. Well, welcome everyone. I'm excited to be able to talk to you about this today. As Corey said, I'm gonna run through the slides and try to give you kind of a high-level explanation of what we try to do, and then I think probably the most productive time will be to drill down on stuff during the Q&A. Let's move to the next slide. I think Corey has touched on most of these points. We're a Boulder-based real assets investment firm. We're a mission-driven company focused on financial and environmental returns, certified B-corp, and we give away 1% of our profits to charity each year. We also run with another company that we share office space with, a charity series in the summer to showcase local nonprofits, get them exposure and help raise money for them. Let's move to the next slide. So our company is set up like a typical private equity fund structure. We've got a fund that holds the assets and a management company that manages those assets. We kind of have a unique preferred return to our investors that is tied to treasuries and to the leverage that we take out on our assets. Our pref is basically the 10-year treasury. If we take no leverage out on an asset, that is to help us as managers get into the money, so to speak, without taking a lot of leverage on. But if we think that leverage is appropriate, we will take that on, and the treasury is then increased by a premium to take into account the additional risk of that leverage. So as I'm sure you've concluded, our investors definitely want us to take on low risk investments. We have a 1% management fee. We fortunately have patient capital, which I think is key for the ag side and the water side of the investment. We have in-house property management that we run, which is mostly on the commercial side of things. Although we do run our own ag operation, but we sort of outsource that through a partnership with a ranching family. All key employees are owners. We do that to align incentives. And we're really a family office. We have primarily one family that is behind us with some other friends and family that are involved in the investment. We did go to market to raise, we were going to try to raise about 150 million, both in the commercial and on the ag and water side. About a year ago, we spent about 6 months talking to high net worth individuals, foundations, family offices, and we realized that it was going to take a lot of time and effort, a lot of travel to raise that money. I mentioned this for folks out there who think this might be something they want to do down the road. The partner that I work on primarily on the ag and water side is a water lawyer. I have a legal background. We're not salesmen. We like to talk about this stuff, but the raising of money in and of itself is almost a totally different skill set. So just keep that in mind if this is something you want to do down the road, because you're spending a lot of time traveling and talking to folks. Let's move to the next slide. So, our model is investments in commercial real estate and irrigated agricultural land that provide competitive market returns while solving pressing challenges facing our world. First one up there is climate change. I think that is almost fundamental to everything we do. We see that as the most pressing environmental challenge. On the commercial side, you see a picture there of a 43-acre industrial site that we own in Denver. What we do with our commercial properties is we retrofit the buildings to increase energy efficiency, and we put solar, and you can see solar panels on those buildings there. That was a building used in the early 1900s to repair locomotives, and now it's got renewable energy on top of it, which is kind of cool. Water, which will be kind of the key, focus of this discussion. We've got to satisfy new demands while meeting agricultural environmental needs. That is the opportunity that makes us excited about what we're doing. And I'll dive a little bit more into that. We can meet the demand for water and leave agriculture and the environment kind of in the dust pretty easily. But I think there's some really interesting ways that help all three out. And that's kind of where we're focusing our business model. Then on the agricultural side, we want to keep ag thriving to help rural communities. And we'll get into this a little bit later, but water is also often removed from agricultural lands, leaving them barren and taking, the family that was running that property out of the community and harming rural communities. But there are some interesting ways that I think rural communities can be helped and agriculture can benefit, and we can meet, growing needs in cities. Let's move to the next slide. Let's talk a little bit about our ag and water investment model. When we started thinking about how we would put this together, we really didn't want to, base returns on emerging water markets or speculation in water or whatnot. We wanted to come up with a solid investment thesis and then have the exposure to water and some of the emerging, ecosystem services markets be a bonus, hopefully as those develop. So, the first and key piece of this investment thesis is land appreciation. And we looked at land appreciation data for farms and ranches in the Rocky Mountain West, and it's about a 5% a year annual appreciation when you look back about 36 or 7 years. Then on water appreciation, there's sort of a much smaller data set, but it's emerging in the West that properties with quality water are appreciating at a higher rate, and water assets are appreciating a higher rate, so that's a bonus. Operating income from the ag side, maybe 1 or 2% return would be fantastic. Ag is a very tough business, and we could have chosen to lease the properties, maybe make a 1% return, but we wanted to have control over how those properties were run for a variety of reasons. So we've actually taken on to owning and operating the actual agricultural business in addition to the land. Environmental services or ecosystem services, this is everything from putting a conservation easement on a property, which helps us buy down our basis and increase our operating returns, to something like a wetlands mitigation bank, could be a species mitigation bank. Those markets are emerging. Carbon sequestration, those kinds of things are all things that we would actively be involved in. But again, we didn't really put into our model a return because those things are a little bit more emerging and we can't bank on them. Renewable energy, just like in the commercial sector, we would entertain putting solar on a property like this, particularly if we change these center roll pivots these side roll sprinklers into center pivots that would need electricity to run. In this property, you can see that there are these hillsides around. Our water comes from a hillside like this that's outside the picture, down a long fall, and then to the property. All these sprinklers are running off of that pressure, which also creates the opportunity for hydroelectric, which we're looking into on this ranch. And then the last component is really sustainable ag, and we've looked into producing grass-fed beef or organic beef. We've looked into regenerative ag. We've looked into high-intensity grazing. At this property, for a variety of different reasons, I think we will probably go organic. It's been run as really de facto as an organic ranch because fertilizer is expensive and the weeds aren't too bad. The previous manager didn't use those inputs, so it's basically organic already, and we're in the process of getting it certified. Let's move on to the next slide. So agricultural investment. A big component of this with the water investing side is what we call farming water. And this, I'll get into water law here in a couple more slides, but a key thing to understand is that you can't simply buy a water asset and then just let it sit around and not do anything with it, and then sell it later on down the road. The water law does not work that way. There's an anti-speculation doctrine that prevents you from doing that. And really fundamental to your water rights in the West is using those water rights. So this picture is from Utah. It's basically in the desert. And this farmer is pulling water out of the Colorado River, putting it through the center pivot and growing alfalfa, which consumes a lot of water. So this water right would probably be, in terms of amount, very high versus, say, growing wheat or corn or some other crop. So in essence, to invest in water, you have to also invest in agriculture. That's pretty much a key thing. So let's try the next slide, Corey. So let's talk a little bit about our agricultural operation. For those of you that aren't familiar with cattle ranches, there's a couple different kinds. We have what's called a cow-calf operation. So, our revenue is generated from these guys, which are our bulls, doing their job, and then our cows producing a calf crop every year. Our calves are born in February and March. We have them around on the ranch in the spring. We move them to higher grounds that are actually on federal grazing permits in the summer. And then late fall, early winter, those calves are sold, and that's how we generate revenue from the agricultural operation. Let's move on to the next slide. Here's just another picture to show you kind of, this is the day-to-day. This is the ranching family that we work with. We created kind of a unique partnership with them where they're incentivized to produce a profit, and they earn equity in the cattle herd that we have by building it and staying around and working for us, over a 10-year period. Here they are moving the cows and the calves to another pasture. It's been really interesting. I mean, I got a lot of exposure to ag when I was at the Nature Conservancy, but now to kind of be deep into the business, it is interesting to just understand all that goes into, producing meat or leather, anything that comes from cattle. And these folks are expert at what they're doing. We're very fortunate to be working with the 4th generation ranching family that are extremely hardworking, motivated, love what they do, and very entrepreneurial. Let's move on to the next slide. So now we're to Water Law 101. For those of you guys in, on the East Coast or even the Midwest, the law there is that anyone who has land on a body of water has the right to use that water. And so the water is really free for the taking. And there's obviously no need to really regulate it because there's ample rainfall and water. So, hey, just use what you need. West is obviously very different. I mean, it's really a desert out here in most places. So the law that has evolved in the West is that the person who puts water to a beneficial use, which could be irrigating a field, for example, gets a water right. And then the question becomes, well, how do you figure out whose rights are what relative to other people's rights? And the law basically says that, the first person to use water out of a source has the first right to that water, and that creates a priority system. Then the second person, third person, etc. So, eventually there's not any more water left, and folks with low priority, they're going to have a weak water right. Another key factor is the amount of water being used. And I mentioned this a minute ago when we looked at the center pivot. They were growing alfalfa there. The amount of water being used is literally the amount of water that the plants that you were irrigating drinks or consume. So plants like alfalfa consume a lot of water. Hay consumes less. That is what dictates the amount of water that your water right is, how it is being used. Continuing the use of the water every year is important. If you stop using your water and just let your fields dry up and sit for a number of years, then you've abandoned your water and you'll lose your water right. And then another key factor is the reliability of the source. All rivers are not created equal. And in a time of climate change, you have to try to figure out, how is a certain area snowpack going to be affected, and how is that going to affect runoff? And it's a real challenge. I mean, that is a real unknown, but we're trying to figure those things out and see. This year we're extremely dry year, record breaking, in fact, in the southwest part of Colorado. I think it's the driest year on record ever. I just talked to some of the folks that manage our federal grazing permits, and they are 30 to 40 days ahead of schedule in terms of the melt-off, which is going to be a major issue. So these are some of the challenges that climate change is posing to us. Let's move to the next slide. So water investment overview. So, this is kind of simple, but the opportunity that we saw is that water demands exceed supply in the West. This is both a function of climate change and increased use. It's also a function of when the various states along the Colorado River, for example, got together in the early 1900s and said, hey, let's divide up the water. They did it in a really wet period, and that period has not returned, and they basically over-allocated the water in the river. So they're getting very close to running into the situation where they're not getting enough water to meet their needs or their rights, and they'll have to kind of renegotiate or litigate over that. Rapid population growth out here, obviously that's increasing demand, and rising temperatures are really the key factor. I think we know less about how climate change will affect precipitation and more about how rising temperatures will basically result in plants needing to drink or consume more water. And that will mean that there is less water in the system. And then, these things are all driving, about a 9% per year appreciation rate on the limited water data that we have right now. Water markets, we think that water markets will continue to evolve and that will actually make water more valuable. So this persistent scarcity that we're seeing is causing an increased activity in water markets. Colorado is probably second largest in dollars traded to California. California has a really sophisticated market, probably the most. So the strategy is to acquire and aggregate senior surface water rights that can be sold or leased to a variety of uses. And this water, in the meantime, will be used to irrigate crops and generate yields from agricultural operations. We will get here to, I'll get here to a minute, how water can be used in different ways to meet agricultural or industrial needs. That is kind of key to our thesis, but let's go to the next slide and I'll get back to that in a second. I wanted to give you guys kind of an idea of how this looks on the ground and how it works a little bit. So if you take the Colorado River, which starts in Colorado and runs through a number of different states as it makes its way to Mexico, and then into the Sea of Cortez. It has a huge economic impact along the way. I mean, it serves 40 million people in places like LA and Tucson, Denver, Phoenix, Las Vegas. Supports 4 million acres of irrigated ag. It contributes to the generation of 20% of the US GDP. It's kind of shocking. But when you look at 2000 to 2014, the river flow declined 19% when compared to the average flows from 1906 to 1999. So that was in part because there were some wet years early on, and in part because of climate change. So the supply is dwindling. Storage in Lake Mead and Lake Powell has dropped 40% of capacity. It's critically low. I mean, there are concerns that Lake Powell will drop so low that it can no longer generate energy, through the hydroelectric dam. That is a major, major problem. So obviously water is scarce. one of the things that really hits home is when people hear that the Colorado River doesn't make it to the Pacific Ocean in most years. That's pretty unbelievable. We suck out every drop of water along the way, and it doesn't even make it back to the ocean. Let's go to the next slide. So water market drivers, rising temperatures, we've covered that. Law of the river, this is what I alluded to, where the Colorado River is divided up among the various states along the way. And we're looking at a point when the agreement that was struck will no longer be able to be met, and these states are going to have to figure out, okay, what do we do now? Population growth, I mean, the Southwest is just booming. And then the environment. This is actually, I think, kind of a really important thing that's happening. Governments and the environmental groups are purchasing water to increase stream flows to protect fish, recreational boating. The right to keep water in a river so that you can have a kayak course didn't exist, 20, 25 years ago, but has been developed and evolved and now exists. And there are cities, for example, that have boating parks in streams that run through those towns, and they will buy water rights to keep water in the river so people can pursue that recreational interest. Those are kind of the new and evolving water rights, and they're critical to the economy out here and to the environment. And those are the areas that I think are kind of exciting to see evolving. I think that the evolution of markets will help benefit those interests as well. Let's go to the next slide. So how do you monetize, water resources? This is something that's kind of hard to communicate a lot of times, but income and appreciation, that's the most basic. We believe that if we just hold these properties and then sell them to another farmer or rancher down the road, they will be more than properties that are dry land or don't have any irrigation. So that's the most basic one. Transfers, this is moving water through sales or leases to higher value uses. Obviously, if you dry up a property and sell the water, then that ends the agricultural uses. If you do a temporary transfer, that allows the agricultural uses to continue on the property, but maybe you don't irrigate a field for 2 months in the summer, and that water moves to another use and provides needed income, probably at a premium to the farmer or rancher. We think that can actually benefit ag. Water infrastructure, building of pipelines or storage, those are other ways to monetize water resources. And then aggregation, having a bunch of water rights in a certain area obviously creates scale, and then it's easier to act with somebody that has control of a greater amount of water. Let's go to the next one. So typically, kind of throughout history of the development of the Front Range, which is kind of Colorado Springs, Denver, all the way up to Fort Collins and Greeley, the cities in those areas acquired water by buying irrigated farms and going through a court process to change the use of water from irrigation to municipal use. And in that process, they would be required to put a covenant on the land that would prohibit it from being irrigated in the future, because that water was now being used for municipal purposes. And what you ended up with was properties like this in the picture, completely dried up, irrigated field that had previously produced and obviously contributed to the economy in that local community and supported a farming or ranching family. That has created huge backlash from the agricultural community, understandably so. And it has resulted in some counties saying you can't do this anymore in our county, or you can't move water out of the county to prohibit cities from getting water that way. So the question then becomes, how do the cities get water? Do they continue to buy and dry things? Is this adversarial relationship of work continue to go on between ag and urban, or is there a way to create, to meet those municipal needs while also benefiting ag? And we think that is the case. Let's move to the next slide, and you'll see an example of a pilot project that has taken place on the western slope of Colorado. I talked earlier about how Lake Powell is very low. We need to get water into Lake Powell to keep the hydro going. We need to get water into Lake Powell to meet the needs of the states downstream from Lake Powell. So in doing that, we actually, as a state of Colorado, will be sort of securing our water rights by making sure that folks downstream get what they are entitled to. So in order to test that out, and also to figure out if we could benefit some endangered fish in the Colorado River. A group of municipalities and environmental groups got together and decided to create a pilot project where they went to the Grand Valley Water Users Association, which is basically an organization that pulls water out of the Colorado and then distributes it to farmers and ranchers in an area around Grand Junction. They went to them and said, "Hey, could we pay you to not irrigate your fields for certain times of the year to see if we can move that water down to Lake Powell?" And the experiment was a success. The water moved down to Lake Powell. Folks participated in the program. The fish were happier because they had more water. That is this kind of experiment is the possibility that we think could help, solve water problems for the state of Colorado and for municipalities. Now, this project was not without, a backlash. There are definitely, folks out there that think that this is still a bad idea, that every drop of water should, be put onto fields and to grow agricultural products, and that it's really not our problem if Denver runs out of water or not. But our view is that, if Denver runs out of water, they're going to get their water from somewhere, and that it's much better to be proactive about figuring out ways that can provide some economic benefit to folks in ag without, putting them out of business. Create some benefit to fish in the river by moving that water through, and the fish need water in the river, and benefit the entire state by firming up our water supplies. So these are the kinds of emerging transactions that are happening that I think would be a great alternative to buying and drying properties. Let's move to the next slide. So let's talk a little bit about the key challenges that we have here with investing in water and kind of our business model. And I think the first one is human nature. Folks don't really like to deal with problems until they're front and center, and in my experience. And frankly, these droughts that we've been having are catalyzing a lot of these conversations, which I think is a good thing. But if we have a number of wet years, people forget quickly about the drought and the problem. This is also really a collective action problem. This is, a problem for everyone in the state, and it's hard to get folks on the same page about what the solution is. It cannot really be solved just by a couple individuals or cities solving, in my opinion. There's a lot of anti-government sentiment out west. Ranchers and farmers are typically conservative. So if you don't have the will to solve the problem, and you don't have a government that's going to be able to raise funding to, pay folks not to irrigate at certain times, it's going to be hard to solve the problem. Politics around water. There's a lot of politics around water. There's sort of, Western Slope, which is the west side of Colorado. Farmers and ranchers who say, why is Denver's growth our problem? There's a lot of folks in the Denver metro area that say, hey, look, we need water. This is more important than agriculture. Those kind of politics. Politics in general, at the state level, in terms of trying to change laws to make these things happen, or raise, taxes to create funds for these kinds of things. Markets in agriculture are a challenge, just for all the reasons that you don't know what commodity prices are, and you have trade wars and whatnot that we're dealing with now. The weather is a huge challenge to the business model. We hedge that best we can by buying drought insurance, and by trying to figure out, backup plans and whatnot. But we're coming up on the worst year that's ever been known in the area where our ranches are in terms of drought. And then opaque markets. Our commercial business, you look at a commercial property, how much it costs, what the rents are generating, what the cap rate is, make a decision whether you want to buy it or not. These properties, these ranch properties, not so clear what they're worth, not so clear what they're going to generate. It takes a lot of time and effort to figure out what's a good value and what isn't. Let's go to the next slide. So lessons learned thus far. We've been into this, about 2.5 years now, maybe a year and a half, maybe spent half a year or a little bit more developing the investment thesis, and we've been actually running the ranches for maybe a year and a half or so, 2 years. First thing we've learned is the importance of public perception and community relations. This water stuff is, like I said, highly fraught with, different views on, what should and shouldn't be done with water. It's really important to get out there and talk to folks, and build community relations so that you can operate in the area. Selling cows, branding, all these things, the activities that you do on a ranch, are dependent on your neighbors. And so there's a strong community component here that you have to work on that isn't the same in our commercial side of the business. Learning how to do things differently. I think that if you're going to try to increase returns from 1 or 2%, you definitely have to dive into ecosystem services or, having an organic farm or ranch to figure out how to do things differently to generate higher returns. You've got to get people to try new things, whether it's folks that are working for you or the neighbors or whatnot. That's going to be key, especially with this water thing, because if people don't agree that temporary leases of water are a good idea, and they double down on, we're not going to move a drop of water off these properties, that is going to thwart our investment thesis. So we've got to get people to see that this is actually a good thing. This next one's a bumper sticker in Boulder that I love. It's don't believe everything you think. And the reason I bring that up is because there's a fair number of, self-righteous folks here that think they, sort of know the answer to this or that, or how to solve climate change or whatnot. And we've encountered that a lot in trying to develop kind of the environmental side of our business. And I mentioned that because it seems like there's a different trend every day, whether it's we're going to sequester carbon in soil, or, you've got to do regenerative ag, or, high intensity grazing or whatnot. And if you get into this business, you really have to dig deep into these things. There's a lot of uncertainties and whatnot, and you can end up chasing your tail trying to figure out like what's the new fad and how to, be an environmentally friendly ag operation. And then the last thing I want to leave you with is believe in what you're doing. By its very nature, impact investing and trying to, do ranching or use water differently puts you out there a bit. But I think if you have a well thought out investment thesis, you need to stay the course, believe what you're doing, and, move that forward. So those are kind of the lessons that we've learned thus far in this experiment that we're on. And with that, I'd love to open it up to questions. I know I kind of ran through that quickly and there's a lot going on, but would love to kind of hear what you guys are thinking and try to answer those questions and dive in whichever direction you want to go.
Well, thank you so much, Mike. That was a fascinating setup, and we really appreciate it. And as you just suggested, we'll just dive into the questions and start talking about the things that the audience is asking about. So to start off, we want to, I think, ask you if we can go back to sort of the buy and dry issue a little bit more. You discussed this in your presentation, but it seems like taking advantage of water appreciation over time ultimately, requires selling to someone who places a higher value on water, and those entities tend to be municipal and industrial users, among some others. One of your slides said, you sell and lease to those users, and that's how you realize some gains. And in the Grand Valley Water Users Association example you discussed, it sounded like that was sort of a 1-year lease and dry. But, if you do that regularly, a 1-year lease and dry, repeated many times seems a lot like buy and dry. So could you just dive into that issue a little bit deeper and sort of talk about, all of those issues, how you sort of communicate that and how you sort of parse out and make sure that what you're doing, does continue to sort of support agriculture and doesn't fuel that those buy and dry concerns that you mentioned?
Yeah, absolutely. I mean, a couple things to say. The first thing is we have not done a single water leasing transaction yet. So, who the ultimate user of the water is in one of those situations is to be determined. And, my slide talking about municipal and industrial users is just sort of throwing out the spectrum of different users that are out there, and that includes environmental users too. We talked about doing a similar program to the one in Grand Junction, but didn't pursue it. I think that our first transaction may take place this summer, and in the area that we own, this ranch has been featured in a couple of these photos. There's an active water leasing market because there are a series of reservoirs above our properties, and there are orchards and vineyards in the area, and there are hay fields and cornfields. And I think everyone in the ag community recognizes that getting water off of a hayfield and letting that go fallow and having that farmer or rancher buy hay from someone else and then pay for that hay and maybe make a little bit of profit by leasing their water to, say, an orchard grower that has junior water rights, is a way better use of that water. When orchard properties are, $30,000 an acre, and in irrigated hay meadows, $4,000 an acre, and the hay meadow can recover from that. So that's, I think, a really interesting example of the market benefiting ag when you allow for these flexible transactions. So, and that can also happen, obviously, with municipal or industrial uses. We would also not sell our property to, be bought and dried. I mean, there's, only so much you can do to prevent that, but that is not in our game plan at all. We would not do that. On the temporary leasing, I think Corey brings up a good question, which I think some folks in the ag community are asking, which is, if you, temporarily dry up properties and you do that year in and year out, aren't you just drying up properties? Isn't that the same net effect? And in my view, that's really something that needs to be dealt with by the water users themselves, because I think they best know what is good for them. And I think that's where the Grand Valley example is interesting, because you have, a consortium of farmers and ranchers and an organization. So you have kind of the collective action piece set up there for them to figure out collectively what is best for all of us. And they could very well say, we only want to do this to 10% of the land. We only want to do it every other year. And they can dive in and think about, what is the minimum amount of ag land that's needed to have, our community thrive. And I think they can then also price it in a way that compensates for, any negative effects. And they can also deal with equity issues and, potentially spread that money around all of the users in a way that everyone benefits and does better. But they have to take that on and think about that and figure that out. That kind of transaction to me is very different than, Denver Water going out and buying a ranch with like we've bought with a lot of irrigation, and then going through an adversarial water court process and just basically saying, we're going to do what we want with our water, and then drying up the property. Those to me are the two options. And I think the temporary leasing, makes a lot of sense, and it can be timed to things like commodity prices, where, it doesn't make sense to plant corn because the cost of planting it and harvesting it's going to be more than what the market is paying for it. Probably doesn't make a lot of sense to put the water on that ground in that year. It doesn't make anyone any money, and it certainly doesn't help the ag community. So there's a lot of complexities, but I think that the temporary fallowing and leasing program is a much better answer. And, I'm, unlike a lot of people, I'm one of those folks that says, why not, we have a problem that's coming, why not figure out how to solve it in advance than to let a crisis happen where then kind of all bets are off. And, I think people are just scrambling to try to meet water needs, and it probably happen in a much messier and more negative way.
Yeah, that makes a lot of sense. And the way that you just described it, even it sounds sort of like a diversification of income, that a farmer could choose if in a given year planting and harvesting corn isn't going to be the most profitable thing to do. They have an alternate income stream they could turn to, and they know that, selling or leasing water, is another thing they could look at to sort of stabilize their income. So that makes a lot of sense.
Yeah, I mean, there are other options too. I mean, we met with a farmer the other day that converted his cornfields to organic, which requires not spraying for 3 years. In those 3 years, you're going to get marginal crops. And he leased his water during, some or all of those 3 years to basically help underwrite, the conversion from conventional to organic. So that's a great use of, that water. And it allowed, and those organic crops bring a significant premium for him.
Yeah, no, that makes a lot of sense. Thanks, Mike. That really clarifies that question. So moving on to another question, we had a viewer who is interested in the Grand Valley water lease example that you mentioned. You mentioned that the Nature Conservancy was involved, and sort of different parties that came together and kind of made that happen and funded it. But this viewer was wondering, a little more specifically how that was funded and how you make that sustainable. Who pays for that over time? Do you kind of expect, nonprofits to come in and pay for that over and over again, or something else?
Yeah, I think I just unintentionally left out that, Front Range, which again is sort of Denver, Colorado Springs, that area of Colorado, cities in those areas also put in money. And I think that is really, that plus the environmental folks is really the source, right? If fallowing a field and getting water to Lake Powell helps, firm up supplies for, Front Range cities, then they should pay. And if it helps benefit fish, then, environmental interests should pay in some way. And you can imagine, let's say that there's a big city in the Front Range that says, geez, we have junior water rights. And if there is, a number of dry years, then California and Arizona are basically going to be able to take the water that we're using now away from us, and we're not going to have water for our city. So what do? Do we go out and buy farms and dry them up and then have more water and buy senior water rights so that they're secure? That probably costs a lot, takes a lot of time. There's legal uncertainty in doing that, going through court cases. Or what if that city could instead work with an organization like the Grand Valley Water Users and basically buy an option for water in dry years, where they said, we're going to pay you an option payment of X amount of money. You get to keep that whether or not we use any of your water. And then, when we have a dry year and California, say, has priority over our water, we can ask you to fallow, X many acres, which will send, a certain amount of water down the river to California. And I'm oversimplifying this a little bit, but just for the point of the example. Mm-hmm. And then you'll get paid, when we do that. And, we can only do that, 3 out of 10 years or whatever. And so you get the situation where the city is meeting its water needs, presumably for less than buying the water, but they have the security that they can get the water when they need it in dry years. And then you have the agricultural folks being able to use that water in all of the wet years when the option isn't exercised. And that to me seems like a much more efficient use of funding and of water that benefits both, cities and ag.
Yeah, that does seem like a sort of collaborative way to have a win-win, really. So great.
Yeah.
So stepping back a little bit to think about your overall investment, theory and what you do, what do you see as some of the biggest risks to your theory of water investing?
Well, I mean, there are. I think there's a huge political risk. There are a lot of folks that say, every drop of water, that is currently on an agricultural field should stay there. And, we're not going to do anything to help the growth that's happened in Denver, in the Front Range. And that's your problem. And they could dig their heels in, and counties could enact laws that basically prohibit these temporary transfers. And so there's a political and legal risk that, that never happens. Now that, as I mentioned at the beginning, that sort of hurts our potential upside in the investment, but we still think that, buying quality agricultural land that has irrigation is going to be more valuable in the future, because of things like climate change. So, we don't, our investment thesis doesn't perform as well, but it still performs. So even if that political and legal risk, happens.
Gotcha. Thanks. Mike, you mentioned that land appreciation accounts for the largest return on investment, around 5%. And a viewer was wondering how long you project owning the land before the sale to achieve that return.
Yeah, I mean, I think we'll own the land for a minimum of 10 years, for sure. And it's,
Gotcha.
it's real estate, right? So it's cyclical, and it will somewhat be dictated by, the cycles.
Mm-hmm. Mm-hmm. Yeah. So these are all certainly not short-term investments.
No, definitely not. I think that's important for anyone thinking about, agricultural or land, rural land kind of investments, impact investing. You need a long time horizon to see change happen. It takes time to figure out the ranch, how is it working, those kinds of things, and to actually make improvements. And those things, happen over time. It's not,
absolutely,
like acquiring distressed properties and then fixing and flipping them or something like in the commercial sector, where it can be done much quicker.
Sure. Yeah. So we have a lot of questions coming in, which is fantastic. I'm just going to keep moving through them to try to get as many things on the table as possible. The next question is about sort of the different parties involved, jurisdictional complexities existing between the federal government, state governments, and Native or First Nation reservations make conservation challenging, of course, especially for a substance that crosses borders, like water. So
Yeah.
how could Conscious Bay, act to, or does it have a role to sort of smooth over any of those complexities, bringing different communities or parties together, and working across those boundaries? Water can move from one jurisdiction to another. How does that affect your work?
Yeah, I mean, we have to monitor it. We have to try to understand it. And I think we feel like we have to participate in it a little bit. I mean, we're not, down at the state capitol lobbying. I think there are other groups that are doing a great job of that. But we need to kind of understand what's going on and evaluate that in making decisions. But to give you an example, I mean, there was concern when we started buying some of these properties from folks that we might buy and dry them, or we might develop them, because we were new to town. And this goes to kind of the community relations point I talked about before. And we proactively reached out to folks in the community, whether it was water commissioners or organizations representing water users, and said, we'd be happy to sit down with you and talk to you. What we're doing. We're an open book about what we're doing. We want to be transparent. We're community members. We're trying to contribute to the community, all those kinds of things, and basically explained, what we were trying to do, what we see happening, ask questions about how can we help, what are we missing, those kinds of things. So just being actively involved in that way, which, in my mind is somewhat different than the way corporations have, acted, up until this point in time. Certainly some are more active in the community than others, but I think that this is sort of in line with, being a B-corp, and in line with thinking about, companies as helping bring about social change as part of their mission. So, we definitely take the time to try to, reach out to folks like that and understand what's going on, and, have told people we'd be happy to testify, in front of a committee at the state level about what we're doing, what we think, or whatever. So contribute to all the processes that are involved in making this change, happen, and trying to solve the problem, frankly, just the problem of water scarcity.
Sure. Generally, transparency, contributing, being open to the community sounds like an important part of what you do.
Yeah, absolutely.
Mike, could you talk briefly about how the commercial real estate strategy that you mentioned fits in with the water strategy, and why it is that commercial real estate is a key part of the Conscious Bay model?
Yeah, absolutely. I mean, I think on the commercial side, from an impact investing perspective, I mentioned the renewable energy and the energy efficiency. We track all of the energy at the properties that we have. We have kind of an innovative lease provision in our leases that allows us to charge tenants for capital improvements that bring down their energy bills. So, we're incentivized to put solar panels on buildings and, put energy efficient windows in and whatnot. And we can recover some of that from our tenants, but we are also delivering to them, lower operating costs in the process. So that's important just from the standpoint of, we think this is the right way to run properties. As far as how the two fit together kind of in a diversified investment strategy, what we've seen is that, the agricultural economy and sort of the real estate, the commercial real estate economy are often counter-cyclical. So right now, there aren't a ton of opportunities to invest in commercial properties because we're kind of at the top of the cycle. But we're almost 4 years into an ag recession in the country. So there's more opportunity on the ag side, and that can kind of balance where we, deploy capital, which we think is good. And, this isn't as much of a factor, but it was a real factor when we were thinking about trying to raise third-party capital. The commercial assets are really nice in that you can acquire a piece of property and have an income stream immediately. And when we were raising money, we wanted to make sure that we were paying our management fees. We had an income stream to send checks to our investors right off the bat. That probably couldn't be done if we just had done, an agricultural and water investment thesis. It takes some time to get those up and running, and we just didn't want to be in a position where we were saying, we need to call capital to pay ourselves and we're not making you any money and just be patient with us. So diversifying these two together, the commercial side is, in essence, sort of subsidized getting the ag side up and running a little bit.
Gotcha. Thank you. We have a question, potentially, it looks like from a current ranch owner. It says, for those who currently own ranches in the Western U.S., what are some things that they can begin doing to increase their investment in water? So maybe stepping out from, your role as an investor yourself, but for someone who already has a ranch, how might they be able to sort of best take advantage of the water resources that they do own?
Well, there's good housekeeping, so to speak, in terms of caring for your water rights, and, having a good water lawyer or understanding water law, whether that's through, the people that, help administer the water to that ranch. That's really important. And we often see that people have just failed to do things that, protect their investment. So that's the first thing, is to make sure that you're taking care of your water rights, I think. And then, I think sort of being active in trying to understand what opportunities exist, whether that's by, the environmental organizations, which I think have taken like a really strong lead in trying to outreach to people and say, hey, would you be willing to temporarily fallow your property? Is that something of interest? In Wyoming, for example, like the state office that administers water, those guys were really active in promoting the same pilot that happened in the Grand Valley in Wyoming. And a lot of ranchers were able to take advantage of that program, and I think liked it, although there's been some backlash to that too, in terms of, again, just, setting the ag economy back in any way, shape, or form, some folks object to. But I think those are kind of the ways that you need to kind of try to be tapped into what's going on.
Gotcha. Thanks. All right, we have a few minutes left. I'm going to try to squeeze in a couple more questions. Mike, you mentioned sort of on your last slide the bumper sticker that you see around the area, and how there's some people who kind of think they have the answer to everything. And it sounds like your belief is that, there's lots of different fronts you need to work on, and you're not going to just kind of have one cure all, and you can't just go 100% to a solution all at once. But we have a question about sort of, within the bigger context of climate change, there's a lot of strong evidence that we need to move away from meat and ranching and change the types of crops that we are growing, and sort of do a larger systematic shift. And this viewer was wondering if in your work you're advocating to any extent kind of changing the models of agriculture altogether. They asked basically if you're looking at, switching from ranching to, not having cattle, or switching, the crops from alfalfa to something less water intensive. How much are you kind of trying to shift kind of larger things like that?
So the kind of the fundamental, environmental needle that we're trying to move is with the use of water. Trying to keep water in streams, for endangered fish or environmental uses, and trying to help move the needle on getting people to accept the more flexible temporary transfers of water. So that's first and foremost our priority, and we think that's our focus. And we think if we can help move the needle on that, we've done a lot. But that's not to say that we are not interested in all of those other questions that you just raised. And as I mentioned, we were looking at, doing grass-fed beef on the ranch. The reasons that it doesn't work in the place that we're at, because of the temperatures in the summer and weight gain. We think we can produce organic beef, and that there's a premium there, so we probably will pursue that. We would entertain changing the crops on the property, or not producing meat altogether. But that's sort of so far beyond the horizon that we're at right now, and kind of off focus from what we're trying to accomplish. We have to focus right now on, producing an operating return. And the reason that is key, and I think the reason that it's key to do it even in a conventional way, which I realize is not ideal from a climate change perspective, is that if we can show that, you can be a cattle rancher and temporarily lease your water and help solve that problem and make more money and be more secure as an ag operation, then we think that that will result in other people adopting those practices and, the scaling of the solution. So, we might be solving the water problem and we may not be able to solve the climate change problem related to beef. But we think that, we're happy with trying to figure out the water side of things, and then, we'll see if opportunities arise that can allow us to look to other environmental problems to focus on too later on down the road.
Mm-hmm. And shows them where to start with moving the needle.
Yeah.
We're going to do our last two. First, you mentioned it was hard work to fundraise for these investments. We have a viewer wondering how you funded your initial acquisitions, the properties that you have, and what the early investors have been most attracted to.
Yeah, so I mean, the early investors that we have, are a high net worth family that was interested in getting into real assets. They had really no exposure to that. And the initial acquisition was a ranch in Steamboat Springs about 10 years ago. That was before the company was even formed. And out of that acquisition, they said, hey, we'd like to invest and have you guys, go and buy more ag land for us. That was at a time when commodity prices were soaring, and the general economy was in the tank. And so we quickly kind of said, this is going to be hard to get into this ag world right now with prices running up. And we've got a lot of commercial real estate opportunities in the Front Range, which we believe is going to be growing and a good investment opportunity. So we pivoted and turned there and picked up a bunch of commercial real estate investments. Then we came back to this ag stuff about 2 years ago because of where we are in the cycle and, my joining the firm and that kind of stuff. So that's how we ended up where we are with our investors. And I think that on the water side of things, what is really attractive to them, and this was attractive to a lot of the high net worth individuals and family offices we talked to, it's just a totally non-correlated asset class that nobody really has exposure to. That was what was really interesting. And I think they feel like, like these ag properties are not going to go to zero. So this is not like a venture capital investment in some company that could totally blow up and I lose all my money. The price of the ranch may go up or down, but we're going to lose a little bit maybe is the downside risk. But the potential upside risk of these assets becoming more valuable down the road is really interesting and attractive. And it's, a nice complement to the commercial side, which is, much more kind of slow and steady and reliable income stream and, modest depreciation and that kind of stuff.
Yeah, absolutely.
So, I don't know if I got to everything there, but the main headwinds we had raising money were people very interested in the water stuff, but we didn't have a track record yet. So now we're building that track record. People not interested in commercial because where we are in the cycle. So they were like, I would like to invest in water, but not commercial. And I told you kind of why we wanted to combine those two. Mm-hmm. That was a challenge. Those are probably the two main challenges we had.
Gotcha. So we are hitting the hour, but just wanted to give you a second to end on this last question. However, just if you want to give a couple bullet points, what do you think the biggest opportunities are, and how are you at Conscious Bay, contributing to, or how can you contribute to sort of solving problems with the recent droughts and just all of the sort of water scarcity issues writ large? What are you looking forward to, and what are the opportunities?
Yeah, I mean, I think that the biggest opportunity is really to show by example. I think that this problem is partly intractable because so many different individuals, have interests in water and land, and the collective action problem is really hard to get these folks to move forward. In my experience, most ranchers and farmers are very individualistic, and when I was at the Nature Conservancy, where I saw people who originally had said like, this conservation solution is crazy, or we shouldn't do this, or it's, conspiracy theory, this or that, they came around when they saw some of their neighbors, put a conservation easement on their property and all of a sudden have some money and buy another property and then expand their cow herd and start doing better. And I think we have to lead by example. That's, I think, where, the most exciting opportunities are, and getting to know folks in the community and working with people and, trying to make this work, I think ultimately will be the biggest benefit, hopefully, to trying to meet increased water demands and decreasing supply.
Great. Thanks, Mike. Well, we're certainly looking forward to seeing what happens in the future there. Unfortunately, we have run out of time. We would like to give a big thanks to our speaker, Mike Higuera of Conscience Bay Company, for a really wonderful discussion. And would also like to thank the audience for submitting so many questions. Unfortunately, we weren't able to get to them all, but for fostering a great discussion with Mike. The recording of this webinar will be available on our YouTube and iTunes channels soon, so please check back later for those. And last but not least, be sure to check out the CBay website and newsletter for more information on upcoming webinars. Until next time, and on behalf of my co-host Amy Torget, who was covering everything behind the scenes today, this was Corey Scalt from the Yale Center for Business and the Environment. Have a great day.